Good morning, everyone. Welcome. It is 6 a.m., half an hour before the market opens. Excuse me. I have the hiccups this morning. Actually, I had them last night all the way into this morning. So I apologize if you hear me hiccuping during this entire video. So uh, we it's June 6th at 6 a.m., excuse me. And yesterday we made this high up here, but we were talking about how it was a weak high, and it's weak because it's really just being driven by one sector and really just part of a sector, and really mostly by Nvidia. So the entire movement is being propped up by mostly a single stock. We still have a very low participation in the market. And so it just seems like this high is on very weak legs. Now, we're not going to say that it's 100% assured that we're not going to be able to move much higher, but chances are that this is not going to move much higher. So we are also looking at the economic data, and we have the jobs report and international goods and services. So those will have an impact, especially after the JOLTS report. JOLTS report was a little bit of a surprise, where the job openings came down well below prior and consensus. So the question is, why are there more job openings? Is it because employers are not, or sorry, why are there less job openings? Is it because employers are reducing the number of available jobs, or is it because all of the jobs are being taken up by the workforce? Today, we have the jobless claims, which helps us understand that exact question. So when we look into the jobless claims, initial claims are up 229 to 229,000, and our moving average is up as well. So what does that mean? That means more people are claiming unemployment, less jobs are available. It looks like companies are cutting jobs, not only job openings, but existing jobs. So that is an indication of a weakening market, or sorry, not a weakening market, but a weakening economy. And so that does give the Fed a little bit more license, because remember, their dual mandate and their goal has been to slow down the economy and to increase the number of unemployment rate. Sorry, increase the unemployment rate. So that looks like it's starting to be accomplished. Now, that does increase the odds of a rate cut this year. However, it does not increase the odds of a rate cut this June or July. So we shouldn't see this number realistically go up. It should still come down. That doesn't change our analysis that this should collapse to zero by July 31st. It just increases the odds, maybe September, but more likely November or December, of a rate cut. Why do I say that? Because the Fed needs data. The Fed needs trends. The trends are multiple data points, and so far we've only have one data point, so that's not a change of trend. So these data only come out every month, so we need more data. We were only going to get one more of these before, maybe two. No, it's already June. We're only going to get one more of these before July, so that's not enough for the Fed to make a decision. It's enough for the Fed to start leaning a certain way, but we'll get another one in August and another one in September, and that'll be 4 points of data. So that's why it's maybe possible in September, but more likely November or December. So we're not going to get too excited about this. Let's see how the futures market is holding up. So S&P was completely unchanged, but basically completely unchanged. The Dow also basically completely unchanged, and the Nasdaq also 0.1, 10 basis points. So all of this is random. random movement, basically super flat. We do still see that disparity or that divergence between the NASDAQ and the Dow, which is not excellent news. So either way, we're going to have a correction. We've been talking about that for a few days now. So I'm not going to go too far into it, just to say that we are moving into a correction type of environment where not only do we have this disparity between the Dow and the NASDAQ, but also this is only being propped up by a single sector and really just a single subsector and really just a single stock. And that is what we call bubble type of behavior. Now, that doesn't mean that the AI or chip bubble is going to burst anytime soon, but it does mean that we're going to have a really hard time going significantly higher from the levels where we are right now, at least for now. We need more pullbacks. We need more participation. Excuse me, these hiccups are really giving me trouble. More participation in the market before we can really move higher. So we're going to keep on consolidating, maybe pull back once again before we can go significantly higher. Let's take a quick look at TLT. TLT this morning, you can see, is pulling back a little bit. With a high like this, we should expect pulling back. And realistically, by July 31st, we should be down here. And in the NASDAQ, the semiconductor space, there's going to most likely be some profit taking today. So I would be surprised if we make significantly higher highs today. So we talked about a strategy of going short TLT. We could enter our number one right here, number two, basically where we are right now, and then number three when we pull back. So we entered in the post market on, what was this, June 3rd. We have our TLT short right here, which is a little bit under, obviously, because we moved significantly higher, but now is the day that we can add our number two. So let's go ahead and build that long put TLT also out to August, and now we're at a 93 put. That's looking pretty good, and we'll go ahead and save that trade. Yes, save that trade. TLT long put, phase 2 entry on, and this is the pre-market. So we'll see how this develops. I'm very high conviction that we're going to pull back into this channel, and then by July 31st, continue to move downwards. Okay, so these hiccups are giving me a lot of trouble. So I'm going to speed through the rest of this and then end this as early as I can. I apologize. So VIX is coming right here, 12.67. It's looking like we're at the bottom range of what is normal for 2024. So if we come down a little bit more, we'll start considering calls in the volatility index as well. So we have TLT, VIX, both of these conspire. If this goes up, then that will bring the S&P 500 down. If the TLT comes down, that'll put pressure on the NASDAQ, then on the SPY. So that's another reason together that we're going to expect these to start moving downwards, or at the very least, we'll just keep on trading in this range. And I'm just going to end it here because the hiccups are getting very annoying and distracting, and it's actually starting to hurt my chest. So I'm going to end it here. You guys have a wonderful day, wonderful morning, and I will see you in the post market unless these hiccups just persist. But I'll let you guys know. All right. Thanks, guys. I will see you later.